So it's been frustrating to be a PayPal investor. I put out this tweet recently that says this is where everybody loses patience and throws in the towel. These will be the same people buying back in, giving us all of our gains. Be patient. And I got one very common response to this tweet, and it was this. You see on the left and right everything going up, but PayPal is getting slaughtered month by month. Another individual said, opportunity cost is real though. Everything else is flying. Another one is big money is chasing AI these days. Not much upside in PayPal, I suppose. So I think the point of my tweet is actually being proven in the replies to that tweet. One thing I said in response to one of these tweets was markets can stay irrational far longer than most investors can stay rational. It is frustrating. What these people have said is not necessarily false. It's true. PayPal has been a dog, it has been a laggard, and it is hard to watch other stocks go up in a straight line while PayPal is flat or red. But trust your research and due diligence and understanding of the company. All good things take a little patience and time. You know, there's somebody sitting underneath a tree right now because of a seed somebody planted a very long time ago. All I did was search Warren Buffett quotes, and the first thing that popped up is very relevant to this situation. Beware the investment activity that produces applause. The great moves are usually greeted by yawns. So, just like one of the replies to my tweet said, big money and retail investors are making so much money by investing in AI, whether it's NVIDIA, KLAC, SMCI, ARM, you name the ticker symbol. If it's related to AI, it has been flying. While if you're invested in PayPal, you're missing out. So let's talk about this. Is it time to sell PayPal stock and buy an AI stock or another stock that's at least going up this year? But first, if you're new here or returning and not yet subscribed, please be sure to subscribe down below. My channel's been growing like crazy thanks to the amazing community that we've built together here. So be sure to join that. And if you want access to my buy and sell alerts and my macroeconomic analysis and just a bunch of other perks and additional content, consider joining my membership and supporting me. It's also how I avoid taking on these crappy sponsorships that a lot of these other stock market YouTube channels take on. It's very helpful. I appreciate it. Without further ado, let's discuss this. Now, I want to make this clear. When this individual says opportunity cost is real, he's not talking about opportunity cost. He's talking about FOMO, fear of missing out. There is a very big difference in the stock market versus in business. And this ex-user even added, I think it's a very fair assessment. The whole market is flying at the moment. Doesn't make a lot of sense for most people to keep money tied up in a stock that hasn't moved in months. I mean, that's very true. The one part he got wrong is PayPal hasn't moved in years, not months. But we can be as theoretical about this as we want. I can talk about why you should be patient and why you should stay invested. But let's look at the numbers themselves because the numbers speak. In Q4, PayPal's revenue grew 9% to $8 billion. And as Alex Chris said, these were better than expected fourth quarter results. To be clear, they beat revenue estimates by 2%. I think this is going to be the new norm for the company where Alex Chris, the new CEO, reset expectations for the company to basically as low as they can get. For Q1, they expect net revenues to increase approximately 6.5%. I mean, come on, 6.5%. And of course, Wall Street has to take the management team at their word. They can't just come out with these revenue estimates and earnings estimates and projections that are way above what the management team themselves are projecting. But Alex Chris, if you don't see it, has set expectations extremely low so that he can come in quarter after quarter and over-deliver. What he is doing is under-promising so that he can over-deliver, and that's when the stock price will go up. In the past, PayPal has over-promised and under-delivered or just matched their promise, which a lot of times isn't good enough in the stock market if you want your stock price to go up. But of course, the sandbag guidance led to a lot of analyst downgrades on the stock, and we're back in the $50 share price range. So yes, it has been extremely tough. Now, this is something that a lot of my colleagues actually disagree with me on. I'll kind of explain my thought process with this, but they announced a share repurchase program for 2024 of at least $5 billion. I think a lot of my colleagues are freaking out because the stock didn't go up after earnings, so they think PayPal has to make a rash decision quickly in order to see the stock price go up. No, I'm just sitting here patiently because I know inevitably the stock is going to go up. I don't need it to happen tomorrow, but what a lot of my colleagues think the management team should do is actually repurchase far above $5 billion of shares this year. And the rationale behind that isn't terrible. They know that the stock price is undervalued right now, so they want the management team to buy back as many shares as possible at these extremely low prices. However, my viewpoint is this. The free cash flow for 2024 is expected to be $5 billion. So right now, they're projecting that they're going to use 100% of their free cash flow on share repurchases this year. Let's say PayPal came out and said they were going to repurchase $6 billion, $7 billion worth of shares. Then they would be exceeding their annual free cash flow on share repurchases. You see, share repurchases are great, but what a lot of people don't realize is they're more complicated than people think. If you come out and say you're going to buy back more shares than your projected cash flow for the year, you can convince Wall Street inadvertently, if you don't even mean to, that you don't see any natural growth avenues for the company anymore, and the best use of capital is to repurchase shares rather than reinvest in the business to grow the business naturally. If Wall Street is convinced that the growth days of a company are over, you know what's going to happen? Despite however many share repurchases you announce, the stock is going to go down. People invest in companies to see growth on their capital. And to see profitable growth in your investment portfolio, you generally need to own companies that are growing profitably themselves. And the other aspect of this is Wall Street can start to question the capital management at the company. If you're using more and more of your cash for share repurchases, you risk seeing your liquidity ratios look terrible, meaning your ability to pay off debt. Those ratios that measure that begin to look bad. And again, that would result in the stock price going down. So it really is a fine line. I believe that 100% of your free cash flow for the year going to share repurchases is already very aggressive and a very good share repurchase program. I actually think that it would be a bad decision for the management team to announce even more share repurchases for these reasons I just laid out. And I think I have the same thinking that the management team has here, because they mentioned several times in the earnings call that they're going to be reinvesting their cost savings into growing the business. They say it right here on page 3 of their investor presentation. They're going to reinvest cost savings into product, engineering, and marketing. They want to accelerate their branded checkout business. They want to improve overall profitability, including higher growth in PSP services. They want to unlock the power of data to create more value for our customers while tapping into new sources of revenue and margin, and they want to operate more efficiently. The management team is telling you they plan to invest heavily into their organic growth this year. PayPal's management team thinks that their company is still a growth company and that they can return to double-digit revenue growth every single year. But they can't do that if they choose to put all of their cash into share repurchases. I don't want to bore you with all of the internals of their financials, but let's just say this. In the few short months that Alex Chriss has been CEO, we're seeing very positive developments happening inside their financials. Their gross margins are going up. Their revenues are going up. And again, keep in mind, Alex Chriss has been CEO for 4 months. So the fact he's been able to accomplish this in such a short amount of time gives me great confidence in his ability to execute long-term at PayPal. So let me show you my PayPal price target spreadsheet. I've made some changes to this since my last PayPal video. This is another perk that you get by joining my membership, which you can do by hitting the join button located right next to the subscribe button, or hitting my Patreon link in the pinned comment. Again, it greatly supports me, helps me avoid the crappy sponsors, etc. But let's dive into this. As of the most recent quarterly report, these are Wall Street's estimations. This year in 2024, they have the company doing $5.13 of EPS. Next year, they have $5.62 of EPS. And then in 2026, they have them doing $6.12 of EPS. Basically, 9% growth in 2025 and 9% growth in 2026. However, their sales numbers here, obviously they have to listen to the management team and the guidance they gave, but I think these are going to be lowballed tremendously just based on the fact that in the most recent quarter, PayPal grew their revenues 9%. But besides the point, in 2024, Wall Street thinks PayPal is going to grow the revenues less than 7%. In 2025, they expect PayPal to grow the revenues at 8%, and then in 2026, they expect them to grow the revenues 7.22%. Now, if we look at my numbers, I have PayPal growing basically 10% this year in 2024, 10.5% in 2025, and 11% in 2026. Again, this is entirely based off the execution that we've already seen Alex Chriss perform. You can see as a result of my numbers how the company's net income is going to increase tremendously over the next 3 years, in my opinion, which is going to increase their earnings per share tremendously over the next 3 years, in my opinion. Now, over here is where I actually have my real price target. Based on my numbers for 2026, I think we could see 268% return by investing in the stock today. And I've actually used a very conservative assumed share buyback for the next 3 years. For 2024, I have them buying back 4% of their outstanding share count. For 2025, 3%, and for 2026, 2%. However, I did the math here. It doesn't look spectacular. I didn't make it look fancy. But based on the $5 billion that PayPal has already allocated to their share repurchase program for 2024, if they use this $5 billion and buy back shares at today's current price of, let's see what it's at right now, $58.67, they can repurchase 85 million shares of stock just this year. Based on my numbers, I have them buying back only 43 million shares outstanding. Obviously, if the share price goes up, they're going to be able to buy back less shares with that same amount of capital. And I think PayPal's stock price is going to start to go up, so they're going to not be able to buy back 85 million shares this year. If they're able to, that's great. I'll continue to hold my shares, just knowing that over the long term, my total return is going to go up exponentially as a result of that. So maybe you view my revenue numbers as slightly aggressive. Again, you can change these numbers for yourselves if you download the spreadsheet by joining my membership. But I think everybody would argue that my share repurchase every single year is probably conservative. So all in all, this might end up being a pretty good valuation for the company. Based on this year's numbers, I think PayPal should be trading at $126.84. And then looking into 2026, because we're using forward multiples, I think the fair value for PayPal stock is closer to $215, which means over the next 2 years, I expect, again, 268% return by investing in PayPal. So let's think about this another way. And this is actually something Warren Buffett and Charlie Munger have said in the past. I'm not this creative, but let's say you know your home that you live in is worth $500,000. And your next door neighbor comes by and says, "Hey, I'll buy this home from you for $300,000. Are you gonna take that deal? Are you gonna sell your home that you know is worth $500,000 for $300,000? Probably not, unless you're in an extreme need of capital, which you probably shouldn't own a home anyways if that's the case, but that's besides the point. You would not make that deal because you know the asset you own is worth more than what another person is telling you. This is exactly what the stock market is. It's just a broader range of participants in the market. You're having other people out there tell you that PayPal is worth $58.67, and if you want to sell it to me for that, I'll buy it from you for that. But you know as an investor that PayPal is worth $150, $200. So if you weren't going to sell your home for less than it's worth, why would you sell your stocks for less than it's worth? Just because other stocks are going up? No, don't do that. That's a huge mistake. That is a guaranteed way to underperform the market. If you want to be a stock picker, which if you're a stock picker, your aim is to outperform the stock market, you're going to have to make some tough decisions. You're going to have to buy companies and hold assets that don't do a whole lot over the short term in order to capture the long-term gain. And I know a lot of retail investors and some of my colleagues have gotten into some trouble purchasing some super short-term call options on PayPal because they think it has to be the next Meta, where it just shoots up in a straight line over the next 6 months. Don't do that. Only put money you're willing to lose on call options like that. Just buy the undervalued asset and sell for a 280 something % return 2 or 3 years from now when the stock and asset is fairly valued or overvalued again. And as a reminder, don't confuse opportunity cost with FOMO, fear of missing out. You are investing in businesses that you think are undervalued. If you own PayPal stock, you own part of the company. These are not lottery tickets. These are not get-rich-quick schemes. If you want to beat the markets, you have to be patient. And I know that can be difficult. And if you're unable to hold your PayPal stock, even though you think it's undervalued, you're probably investing money that you shouldn't be investing. Only invest money that you're able to invest so that you can remove your emotions from all of it. I'm just sitting here comfortably waiting for the day PayPal stock goes back up because I know inevitably it will. But with that, I'm going to end this video here. Again, if you guys are new here or returning and not yet subscribed, be sure to subscribe down below. Have a great rest of your day. Stay blessed. Keep 10 toes to the ground and your chin up. Peace out.